Welcome to the podcast Coins. I'm your host, Patrick McLean, and I'll be joined by a panel of experts. I get to sit here today with Charles Hodgkinson. Happy to be here with Dave Jevons.
I'm Asif Herji.
Here today with Alex Mashinsky.
My name is Bill Barheit.
I'm Nick Carter.
We have Paul Brody.
My name is Milton Damaris.
My name is Bruce Fenton.
Whitfield Diffie. Mark, how you doing today? I'm sitting here today with Kosala Hemachandra. Nathaniel Popper. I'm sitting here today with Anthony Scaramucci.
My name is Raoul Powell.
I'm Sam Bankman-Fried.
Here today with Roger Ver. And on this episode, we will discuss the rise of the retail investor community, one that appears to share a lot of similarities with the cryptocurrency space.
As the world economy continues to stumble forward in uncertain times, those who previously had a monopoly over the power, governments and their billionaire cronies, are busy trying to figure out how to carve out their new piece of this ever-changing money pie. But at the same time, we the people are growing more aware of the possibilities of our own financial power and how closely that power is tied to our most valuable commodity, freedom. The continuous games must come to a stop. Moving into 2021, we saw a glimmer of this freedom-fighting spirit when a David and Goliath-like battle took place on Wall Street. A group of mighty billionaire hedge funds were betting big that the value of a stock called GameStop would plummet amid the global pandemic. But an army of individual day traders and investors banded together and loaded an unexpected rock into their slingshot. These day traders, who made a vow to bet against Wall Street, went on a spending spree, purchasing millions of shares of the sinking stock, driving the price up at all-time highs. This sudden surge in value forced the hedge funds who were betting on this stock to go down to sell their stocks back, but at a huge loss. Within a month, the hedge funds had lost at least $19.75 billion, while everyday retail investors reap the profits. Is this Wall Street bet's victory perhaps a sign of things to come? Is the world hungry for new, less conventional paths to economic freedom and prosperity? As the pandemic-weary world sits at home, worrying about the future of their economic well-being, cut off from those they love and the social interactions that normally keep thoughts of blatant inequality at bay, what will the outcome of such economic uncertainty be? Who will ultimately be the winners and losers in the unfolding chapters of our story that have yet to be written?
So I wanted to kind of ask about the GameStop conversation over the last few months. If you want to kind of frame out that conversation, why you think it's important.
I think crypto got more ordinary young people thinking about investing and doing things with their money. And it made them think, I can make money by investing in things. And I've seen my friends get rich off of crypto. And so I want to find the next crypto, and I want to find the next Bitcoin. I want to find the next Ethereum. And a lot of those people have looked within crypto, but a lot of those people have actually gone to the stock market and said, where's the Bitcoin in the stock market? Where's the thing that I can invest in the stock market that's going to give me these kind of returns and also offer the sense of belonging that Bitcoin does, offer a sense of purpose like Bitcoin does. It's led people to invest in stocks that have built their own communities, kind of like crypto. And, GameStop, I think, is the most notable example of this, where people bought this stock, but it wasn't just about the stock going up in value. It was like a cause. It was a sense of community. It was a bunch of people doing this together and saying, we're taking on hedge funds. We're going to show that we're just as capable investors as these sophisticated Wall Street players. And that, I think, is something that kind of grew out of crypto. And so this is all kind of growing up together at the same time and leading more people into the world of finance and markets and allowing them to feel like they can get involved in this and they can be a part of it.
I think you can look at some parts of traditional finance right now, which frankly are getting to look a little bit more like crypto, right? I mean, you look at what happened with GameStop, and I think a lot of people are like, what the hell? Some company with very little revenue just 10x in valuation because a lot of retail people on social media got together to buy it, and then there were some liquidations. Like, that is insane.
I woke up that day, I saw it on CNN and they were scrolling through comments
Yeah.
and it said hodl. And I was like, that's the crypto community. I was like, what you're actually describing are like just diehard, like they don't care, they'll burn it down. Like
Exactly. Like, when I saw that, I was like, oh, GME, I'm sure that's a shitcoin I've never heard of. Obviously, it 10x'd in price because of a lot of retail buying pressure and liquidated some shorts. That's what happens every day in crypto. And then people are like, no, it's a stock. And I'm like, whoa, that happened to a stock?
Do you see any correlations there between like the gamification of Wall Street and what's going on in crypto?
A little, but I do think it's very, very different. And maybe this is my old school mentality. You know, I look at GameStop and I see a blockbuster-like ending. If I can download my games on my machine, Xbox or PlayStation, etc., and I can get the access to the stuff that I need without having to go to a destination, well, that destination will likely disappear. And so when Bank of America comes out with this research statement, they think GameStop's worth $10 and it's trading at $500 because of the Reddit B swarm to try to squeeze the shorts. What I'm worried about is that's very different from Bitcoin. I get the vernacular, the hodl, I get the community aspect of it, but the Bitcoin community to me is fundamentally different based on fundamentals. The fundamentals of what's going on in Bitcoin are grounded in long-term facts and grounded in the long-term arc of the history of money and value storage. What the Reddit guys are doing with Wall Street bets is actually antithetical to fundamentals, but they're effectively trying to sting people that are short things that have poor fundamentals. And so they're trying to squeeze those people out of those short positions. And that could help in the short term, but I think a lot of that ends in tears. So I'm very worried for those people because I get the mentality and I get what you're saying about the swarm and the hodling. But one thing to me, Bitcoin and other cryptos have good fundamentals. The stuff that they're trafficking in has actually bad fundamentals on the other side of that spectrum. So I would encourage those people to be more cautious, frankly.
The Reddit crowd is definitely more of like speculations of institutions and hedge funds effectively playing chicken with the mob, right? With the mass retail customer who are trading stocks every day. So I would say it's a little bit different, right? Than cryptocurrencies. When you buy cryptocurrencies, you're effectively betting on the future of the blockchain. You're betting against the US dollar. You're betting that printing money will eventually cause inflation, will eventually erode the value of the US dollar. So I don't think that anyone who's trading GameStop is thinking about what's happening to the US dollar or what is the Fed or Treasury are doing every day and so on. So the drivers are a little bit different, but there's no question that it's the same participant. There's no question that the same people that are buying or selling Bitcoin are also buying and selling stocks. And the proof for that is that they all move together. When the stock market goes down, Bitcoin goes down. When the stock market runs up, Bitcoin normally runs up because people feel rich and they feel like they want to place more bets and so on. So, I think for the average person, each person has to decide for themselves, how much insurance do I need? Like how much of my assets are in dollars, my home, my income, right? All the other assets I have are dollar denominated. And if I'm really worried about this money printing, I'm worried about the modern monetary theory, the MMT, and what's happening around the world with central banks, I do need to put 5, 10, maybe even 20% of my assets into this non-correlated doomsday insurance policy called Bitcoin. So I think the drivers are a little different. And more and more, again, like I said, more and more of the smartest people are choosing to take a chunk of their dollars and put them into this non-correlated asset.
At the end of the day, markets are just sentiment machines, right? And at the end of the day, a lot of traditional value investors, right? If you're a Benjamin Graham style value investor, and as a young and aspiring trader, I read Benjamin Graham's Value Investor and many books on the theory of investing. Traditional value investors would typically look at the fundamentals of a company, right? The financial statements, the facts of how it operates, its cash flows, its profitability, to determine what stocks would be good investments. We don't live in that world anymore, right? The companies that are now the most valuable companies in the US on our stock exchanges, and companies that are trading at astronomical valuations in many cases don't have profits or are not, bringing in a lot of revenue.
Thinking about the Wall Street bets, GameStop Saga, this sort of era. Give me your interpretation of the sort of GameStop Saga and that retail investor movement. What do you make of that?
Well, there's a lot of things that are changing in the world of securities quite a bit, and one of them is this idea of everything going around social media and people having a more active role in picking stocks, and that's a trend that's happened many, many times in history. It tends to go through phases where individual stock traders are more active about individual stocks, and then they go through phases where it's more done by management through mutual funds or something like that. So that's part of it. I hope it's a retail investor revolution, but the levers are still pulled by a very select group of elites that the retail market isn't a part of and can't really affect. And GameStop's a perfect example. That was the trading was halted other than for certain people. So those in the know, who were the insiders, who were the lucky and the wealthy and the billionaires, were able to trade it, and the retail people were frozen out in the cold. So it would be nice to think of it as a retail revolution, and I hope that we're in that, and I think on a long-term cycle we are, but we still have a ways to go before we can put the real power in the hands of the people.
In the Robinhood situation, I'm going to give Robinhood a pass because there were some, as far as I can see, some market structure reasons why they needed to halt the trading. But generally, I agree. There is this sentiment that there's extreme inequality and unfairness, and that, generally speaking, mom and pop, small retail investors are getting screwed, which is absolutely true. I mean, access to credit in this country is highly unequal. It's always the financial firms and the big hedge funds that get the bailouts, and not regular folks. If you actually trace the path of stimulus, where that first COVID stimulus went out, that was to large corporations and much less to regular corporations, which were forced to close up shop, regular retail stores and things like that. So yeah, inequality right now, quantitatively, if you look at the numbers, we're sort of back to Gilded Age levels, right? We're at, in the worst position from an inequality perspective in about a century. So people feel that, even if they can't exactly express the reasons precisely why we're in this situation, they certainly feel that that's why you have a resurgence of socialism. That's why capitalism is sort of out of favor. That's why you have extremism on both sides. Those are the real political consequences of inequality in society. And that's something that policymakers have to reckon with. And that's probably why we're going to get inflation, because one thing inflation does do is it punishes holders of financial assets, and it sort of generally reduces inequality, albeit in an extremely messy way.
So then, is this a retail investor revolution?
I honestly wish that there were fewer retail investors participating in the markets, but I don't blame them for getting involved in speculation, because it seems that right now speculation is the only industry that is paying off. But as the economy becomes more and more financialized, and as capital becomes more and more abundant, and as interest rates remain low, and the cost of capital remains cheap, the only viable profession is to speculate. It completely squeezes out and cannibalizes all other productive enterprise. And that's the tragedy here, is that the Fed has been so accommodating and Congress has been so aggressive with injecting this new capital into the economy that regular industry, regular free enterprise has been sidelined, and speculation has taken over, and finance, which should be relegated, it should be a backwater, has become completely central. And this is a little hypocritical because that's my industry, right? Work in finance. But we shouldn't be so prominent. We shouldn't be such a large share of GDP. Finance should be something that facilitates real free enterprise instead of the end goal in of itself. And yet everybody has now resorted to speculation, to taking out leverage, to becoming highly indebted and to try and trade financial assets. So to me, it's a real sign of degeneration, and it's not really something to be celebrated, frankly.
So you know what it is? It's desperation. Inequality is at record highs. If I am in the group that is a have-not, what do? I'm sitting at home all day. I'm watching my government print unprecedented amounts of money and fritter it away on the most useless things ever that don't actually help us get through this pandemic. What am I going to do? People are trading, people are taking more risk with their assets, not out of some great desire to become traders. It's out of actual desperation. We have two choices as a country. We can give people more money, or we can open up the boomer casino, i.e. Wall Street, to everyone. And the option we've chosen is the latter. And again, the question here for me is, if the public sector won't address some of these fundamental challenges that we face, how will the private sector develop solutions? And at the end of the day, people are looking for alternatives. I think when I talk to people who are interested in cryptocurrencies, yes, some of them want to speculate and make a lot of money in a very short period of time, because who doesn't, right? That's the American dream. We don't have a culture in America. The culture is consumerism, right? So everyone wants an easy way to make more money. But the other thing we see is people are sick and tired of being locked inside of their houses, being told what they can and can't do, and being told that everything's gonna be okay. Because we look at the world around us, it doesn't look okay to me. People have lost confidence in the system that has gotten us to this point, and I think that's why we see a lot of this speculative behavior.
I think what's really happening is this is a symptom of the final terminal stages of our decaying monetary system. And if you look at history, in virtually every single inflationary, hyperinflationary event, you had rampant retail speculation into financial assets. If you look at the Weimar Republic hyperinflation, virtually everyone became a speculator. They started trading foreign exchange or financial assets because they had to keep up with that rate of inflation, and just working their regular jobs was not sufficient. They were forced to pile into risky assets to keep up. So, and this repeats in all of these inflationary episodes. And so what's happening here is people perceive that the money supply is increasing at a 25, 30, 40% annualized rate. That's the real hurdle rate. That's sort of the rate of return you have to meet to tread water. But you can't do that by just working your regular old day job, right? Because your wages aren't going up that quickly. So how do you stay abreast of that? You pile into the markets because you see financial assets have been going up year over year. You see them chasing QE. You see these injections of capital into the economy go directly into financial assets. What do? You react to that. You become a day trader. You think, hang on, all of my friends that are speculating on the stock market are getting rich. What am I doing like a schmuck working my regular old career? Like, I should be doing this too. And so it's this sort of disease that takes over society where everyone becomes a speculator because they're forced to, because their own savings are being debased with these rampant injections of cash into the economy. So that's my analysis, is that the Federal Reserve stoked this and Congress enabled it by injecting huge amounts of cash into the economy, cash that in some cases wasn't strictly needed. I mean, we now have normalized stimulus. Even though the sort of COVID recession is over, the crisis is over, we have ongoing stimulus now. Where does that money end up? It ends up in financial assets. So people react to that. They think, okay, I need to get involved in this because my savings are clearly being debased. These index funds aren't cutting it anymore. I'm going to have to pile into some risky tech stocks.
Again, I will come back to the way the internet happened itself. When the internet happened, anything that had .com in its name or E in front of it, right, attracted amazing amounts of capital. And some of them were completely stupid business cases that within 2 years flamed out and died. And the same thing will and is happening here. And that's why I come back to, if you don't understand the use case, don't invest in it. If you do understand the use case and you think there's a bona fide team behind it that can actually execute well and capture market share, then it might be worth doing. So there are some projects which, for example, say take Filecoin, just to name one, or Uniswap, to name another, where it's pretty clear what the use case is, right? Filecoin is basically like Amazon cloud storage, but done in a decentralized way, and that's how they make money. Uniswap is basically an automated exchange, an automated market maker. That's how it makes money. So you can wrap your head around that and say, I understand how they're trying to make money. Now do I make a judgment as to whether I think they'll succeed or not? There are others which, frankly, are scams, right? And there are others which are jokes that are like Dogecoin is a famous one. It was built as a joke, and yet it has value, and people invest in it.
What do you think that is? And let's focus in on Dogecoin for a second as a good example of this. But why is it that people seem so willing, particularly those that have seen what happened in the dot-com bubble, and maybe those people who are investing in Dogecoin now didn't necessarily live through that period, or at least consciously. But even those that did, why is it that people are not learning those lessons? Is it just a lack of awareness?
Look, I think it's just human nature, right? So when I was very early on, when I was building investment products in dot-com one, there are a tremendous number of studies that look at the psychology of investing. And we as human beings, we tend to make two classic mistakes. We go into something after it's had great performance, so we get in late, and then we sell too early when it's rising, and we sell too late when it's falling, right? So we are the classic buy high, sell low kind of mindset. Most people, right? And it's not limited to crypto.
The rocketing upwards price of Bitcoin always draws attention. Every time those big moves, Bitcoin moves up in a tremendous way, you see an increase in interest. But if I were to point to a single thing that's happened over the last year that has been transformational, it's been the rise of DeFi, decentralized finance. This is the innovation that suddenly has banks, financial institutions, large corporations standing up and taking notice.
Can you maybe give like a layman's explanation of DeFi?
The plain English version of DeFi, the way I like to think about it, is we are just taking reasonable business logic and applying it to smart contracts. So early on smart contracts, what they did was they defined an asset. So it'd say, okay, this is a token, it represents widgets that we have, and there's a certain number of these, and you can own them and transfer them to other people. So that was the initial version of a smart contract. But in fact, any logic that you can apply, you can create a contract around. So decentralized finance was this idea that you could create contracts, business rules, that replicate on the blockchain some of the things that we do in real life. Like if you give me a dollar token, I will hold on to it and I can loan it out to other people and I will pay you interest, right? So I can have deposit contracts, I can have loan contracts, I can have liquidity contracts, I can have insurance contracts, and the idea of decentralized finance is I can make these business rules automatic and programmable. Now at first, again, it kind of looks pretty basic. If I want interest, I can just put my money in a bank, right? And the bank is insured. But where it starts to become really clever and brilliant is the ability to build functionality on top of other functionality. So not only can I have deposit contracts, but I can write another contract on top of that that says, search all of the deposit contracts and find me the one that gives me the best interest rate for the coming week. And so all of a sudden you have financial services and business automation in a way that is incredibly automatic and seamless. And so all of a sudden, you have people in the space of a few months writing, I think I counted a couple weeks ago, something like 70 or 80 different types of financial functions that have taken the traditional banking infrastructure 100 years of progressive development to put together. And so decentralized finance is just this idea that we can make finance automatic and programmable.
Is that scary? If you look out 2, 3, 4 years, what do you think will change or continue to evolve?
I think what you're going to see is the evolution of DeFi, for sure. There's a long way to go in that. It's an amazing experiment. There's a lot of cool products out there. It's amazing. That's said, there's a lot of problems with it as well, so that has to grow up. Whether it's soft maturity models, meaning like, I don't want to invest in some DeFi product, and I could be a new investor or a very experienced one. And it goes boom because it had a security problem and somebody stole all the stuff out of it. Right? I don't want to have that. So there has to be software maturity models. But I think DeFi will become a huge product for people. I'm hearing from banks that want to offer their retail banking customers, so anyone who's got $2,000 in their bank account, the ability to access crypto funds, store them safely, and then put them into verified DeFi projects and earn interest on them. I could earn 4% interest, I could stake, etc., and have them in a safe manner that allows everyone, mom, pop, brother, sister, to get access to those products. So that's what I'm seeing. That's changing the world, and I think in 4 years you're going to see that across many of the major banks in the world, most of the major brokerages, obviously all the small new financial services companies, already offer crypto, but that's going to grow tremendously. So I see a bright future over the next 4 years.
Well, I think even people in the industry, DeFi caught them by storm, right? It was something we thought was maybe 2 years out, 3 years out, and then under, it seemed like 6 months or less, right, it had taken storm. Not that there weren't years of development to get to that point, but gluing all the pieces together came through pretty quickly.
But nothing has woken up our financial clients like DeFi.
Yeah.
Even more than the price of Bitcoin, the specter of US dollar tokens, euro tokens, and yen tokens being able to have all the financial services of the traditional banking system, that has been kind of an explosive growth phenomenon. And they've suddenly identified something that is a genuine competitive challenge to the traditional banking system.
And again, 2020 was, everyone knows what happened. It was very stagnant. And in crypto world, we were actually rising. Like DeFi products came out. A whole bunch of new decentralized applications came out. And NFTs is the big thing now. Like even Wall Street Journal is talking about NFTs nowadays. And guess what it's powered on? Ethereum. So
NFTs are effectively digital collectibles. How to take a baseball card or an art object or other sports memorabilia or something like a Pokemon collectible and put it on a digital network like Ethereum. That's what the NFT model basically is. It's simply a form of program or smart contract running on the Ethereum network.
Look at the NFT craze that we've got going on right now. Okay, are we in a bubble for NFTs? Yes, probably. But NFTs are a real thing, right? If I'm, again, in the old world, I'm an artist, I create a piece of art, I sell it. Once I sell it, it's gone. Like I have no more control over it. It can be resold multiple times. I make no more money off it than I did off the original sale. But now with NFTs, and this is why I think we're getting such take up from creators, is the creator of that NFT, non-fungible token, so a digital piece of art or music or whatever it is that has a one-off, it's a one-off. I as a creator can structure it in such a way that no matter how often it sells, I get a percentage of every sale. That's a completely different and much better economic model for me, the creator, than the current one. And I think this is why they're starting to take off. And so whether you're creating music or art or software or you're writing an amazing book, whatever it is, if people value it and want it, you can now monetize it in ways you could never monetize before. That's the world we're going to.
And there are things you can do in our space you just simply can't do anywhere else. Look at NFTs, for example. It's not about selling a tweet. It's about saying, I'm an artist and I care about something. Okay, let's say clean water in Africa. Well, what if I release a song or some piece of art, and in the intellectual property, it's like a charity copyleft. It's embedded into the asset itself, that every time someone buys it, you have to donate 10% of the transaction to a clean water cause in Africa. And it's built right into the asset. You can't not do it. That's the only way to legally acquire it. You could be dead for 100 years, that is there. So if we had this in the time of the Renaissance, maybe Da Vinci paintings, every time they would change hands, would perpetually have to donate 10% to an art museum or something like that, right? That's never been possible before in the entire totality of human history, to project your desires and wills with your art and your work in such an automated, guaranteed way. And that's just one thing. So of course there's value there, and that's of course worth something, because that fundamentally transforms the entire IP business. And that's just Tuesday for our industry.
We're then seeing the rise of NFTs, which are non-fungible tokens, which is basically attaching a digital authenticity to any asset and being able to trade it. And then we're starting to see within NFTs, we're essentially seeing real estate, art, music, IP rights, communities, gaming. Even if we unpack communities, we've got gaming communities that are interoperable across different metaverses within the games world and become fungible with fiat and other crypto like Bitcoin, right? We can't get our heads around how fast all of this is evolving.
So playing another thing to trends, and I'm just curious, so NFTs are all the craze lately. And I know it's kind of looked at as maybe more of an artist type thing. Do you see any institute or enterprise clients kind of looking at that, either from ones that are in content or other aspects looking at kind of ownership of content rights?
So NFTs are a thing that's happening right now that's hugely popular. And the thing that really surprised us is we've been working on NFTs for several years for industrial applications. So think about a car. If imagine you have a new car, a Tesla, right? Every Tesla has a serial number. So I can't just say my Model 3 is the same as your Model 3 because I've driven mine 50,000 miles and you've driven yours 2,000 miles, right? So we were using NFTs for industrial purposes for the last several years because you want to define a class like Tesla Model 3s, but you want to have a very specific instance like mine versus yours. Each one's a different serial number. So we have clients for whom every time they produce a new batch of beer or a new batch of food, we publish an NFT that records that transaction and is linked to that particular batch. So we were sort of gratified and taken by surprise by how overnight incredibly popular they became. But they have incredible industrial applications. They're going to be the foundation of almost all B2B business transactions for high value assets.
When you think about the next 1 billion users or 5 billion users, what do you think are some of those concrete next steps that the industry is going to have to take to be able to, A, attract them, and then B, onboard them?
Yeah, so we obviously have several obstacles today that we have not made that much progress on. For example, the speed of the Bitcoin blockchain, the speed of the Ethereum blockchain is more or less the same as it was 10 years ago. So obviously, if you want to add billions of people, you're going to need to speed up the network by thousands of times, not just by hundreds of times. So obviously, there are a lot of teams working on that, and we're going to solve the problems. I have very high expectations from all the different initiatives, both ETH2 and Polkadot and Cardano and all kind of other projects that are working on scaling this whole idea of blockchains, right? The second part that we have to solve is the fact that 85% of the participants today in cryptocurrencies are men. Women are almost excluded completely out of this innovation because we made it so techy and so cumbersome and so complicated. So if we want to grow this, if we want to make it the future, we cannot exclude half of the population. So that's the second piece that we must solve. And the last piece for us to get mass adoption is to simplify the user interface, right? To create this seamless, intuitive system that does not require you to be an expert in managing your own keys or understanding every intricate of smart contracts or DeFi or basically know how to manage transitioning from traditional finance to CeFi or DeFi. So all those pieces there are thousands of great entrepreneurs, great innovators working on them, and we need to deliver all of them to get that mass adoption, to get billions of people to make this part of their life. Now, if you don't do that, if we don't achieve that scaling, we have competition. It's not like we got this thing all to ourselves. There is the corporate version of the blockchain. Facebook, JP Morgan are working on basically a competing plan, a competing version. And as you know, Facebook has over 3 billion customers worldwide. For them to deploy a platform that effectively competes with the public open blockchain is definitely part of their plan. And the third version is the government version, right? We talked about a little bit the Chinese yuan, some other countries that are testing CBDCs or central bank digital currencies. Those do not have limited supply like Bitcoin or Ethereum or the Cell token. but they obviously have billions of users already because the government is going to mandate or dictate that every citizen has to use this to receive their payments or to pay their taxes or anything like that. So we have competition. Back in the beginning of the internet, the public internet won. We also had the corporate version and we also had the government version, and the public version won. But it doesn't mean that this time we're going to automatically win. So unless all of us get together, solve these problems, educate others, invite people, make it easy for people to come and participate, we're going to be left with our coins looking at each other saying, gosh, you know, Bitcoin could have been $1 million, but it's only $10 a coin because we failed to bring all these people. We failed to make it the standard store of value, the form of payment, and all the things that it should be.
And to anyone listening, would you tell them to expect more kind of propaganda coming at this industry? Like, do you expect it to get worse?
The optimist in me wants to be able to say everything's going to get faster and better and easier for everybody all the time. But the realist in me, looks around. Anytime in the early days of the internet, the government was trying to demonize the internet and saying it's only used for criminals and child pornographers and that sort of thing. And there were literally legislation proposed that would make you have to get a license to set up a website, and you'd have to literally get government permission if you wanted to set up your own website. Imagine how horrible the internet and how boring the internet would be today if anybody who wanted to make a website on the internet had to get a permission and a license from the government to do that. And so don't put it past them to try and do stupid things to delay and hinder the adoption of Bitcoin, just like they tried to do to delay and hinder the adoption of the internet itself. So it's up to all of us to speak out loudly and strongly and say, no, cryptocurrency is for everybody. We don't need permission for this. Transacting financially with other human beings is a fundamental human right that does not require permission. It's inherent in the human condition. We don't need permission from these politicians. So let's all speak out loudly about that and hope that cryptocurrencies get more traction in the next 24 months, and governments won't be able to block or hinder or slow those things down.
Looking ahead, projecting, and I'm not trying to tie it to a specific time point, so we can say 5 to 10 years or so, looking into the future, what does the crypto blockchain industry look like in your mind?
I mean, what we have, I think, is a vibrant ecosystem of companies, projects, protocols, that all, fit together in really interesting ways to create new behavioral loops and new types of user experiences. And instead of people utilizing large platforms and relying on large corporations, my aspiration for the future is that we create new ways for people to organize and work together outside of the traditional corporate structure. And what that looks like, I think we're creating a lot of those primitives today. We're trying to understand, when I set up an entity like a blockchain network, what are the legal rights that participants in that network have? What are the legal claims people have? What are the incentives? How do those incentives work to foster, promote certain types of behavior? So we're still in these early iterations now that we have these early primitives to build with. But I'm really excited to see this ecosystem continue to flourish. Over the last 7 years, I've just been so amazed by the ingenuity, the passion, and just the sheer intellectual horsepower of all of the entrepreneurs and investors and users that I've worked with. And they all rotate roles, right? Like entrepreneur becomes investor, user becomes entrepreneur. So it's a constant game of musical chairs, and every day there are more and more people coming into the industry who are just so convinced in their belief. And that conviction and that passion, I think, makes really amazing things possible on a scale that I don't think we've ever seen before.
Well, I think it's going to be probably less exciting than it is today. It's probably going to be a lot more regulated. It'll be much more intertwined with financial markets, but it'll also be more systemic, more important. It'll be a infrastructure that is completely normal to use, that powers settlements and transactions. It'll be totally enmeshed into the fabric of everyday life. And you won't think of using the Bitcoin network versus using the ACH, Fedwire, Swift network. It'll just be deeply intertwined into how we, move value around. And it won't be considered a new thing. It'll just be part of everyday life.
More than ever in the past, I do think there's real interesting developments going on in crypto that could lead to interesting new kinds of software that are actually useful, that are not just, not just another speculative coin. There's, interesting social networks being built on this, interesting file storage systems, Filecoin. There's these new exchanges and financial protocols that are interesting. Now, I think in crypto world, there tends to be an overestimation of how useful they are today. I think a lot of these systems are very untested and a lot of them are still going to fail and not work. But I think that they're working in the right direction and they're figuring out the principles that make these systems actually work, and they want them to work. And it's not just about making as much money as possible, although that is still a very significant sort of foundation on which all this is being built, obviously.
The next 5 or 10 years, you're going to see some of these crypto companies become as large as Microsoft, like Coinbase, for example. It's already at $100 billion. How much more will it take to get them to $1 trillion? They're going to be bigger than the New York Stock Exchange. They're going to be bigger than a lot of these things and a lot more volume. And those companies will form an economic constituency to represent that interest. And then eventually regulations will change to allow the large companies like Google, Amazon, Facebook, Microsoft to come into the space with their pre-existing 3-4 billion people in their network effect. And they're going to launch their own cryptos and they're going to tokenize the heck out of everything. The fastest growing web browser is Brave, 50 million users, and they're completely reinventing advertising with the basic attention token. So I say another 5 to 10 years, but once that happens, the winner's there. They're going to have a degree of permeance and resilience and stability that you don't normally see. And it's going to fundamentally change the economic order. And there's a lot of small countries that if they're clever, they collectively will be able to make a huge economic impact and really be a big winner.
I would hope that it has, in that time frame, say 5 to 10 years, it has fundamentally rewritten financial services, as I talked about. I think it'll also fix 2 of the biggest problems with the internet of today, right? The internet of today, if you asked Mark Andreessen or others, I used to be at Andreessen Horowitz, if you ask Mark Andreessen and others, they would say that the 2 things they got wrong, one is they underestimated the value of privacy, and 2 is they never implemented payment, right? You know how you get the 404 page not found error? There was one that they built in for payment not found, but they designed it, they just never built it. Had we done that, had you had to make even a micro payment to see a page or whatever, you might have had a completely different version of the internet. But the version of the internet we have today is people give away stuff for free to be able to collect data on their customers to then sell advertising against them, right? It turns you, if you're not paying for the product, guess what? You are the product, okay? And that has just created this incredibly toxic version, in some cases, of how the internet operates. Blockchain will fix that because it gives control of the data back to the user. And I can control in blockchain who I expose my data to and for what reasons. And it's no longer centralized, it's decentralized. I have control over it. And so my vision, hopefully, or my hope, is that it'll rewrite financial services, make it much more inclusive, and it'll fix the privacy problems that the internet created.
And then projecting out ahead, giving me your vision of the future, what do you think the crypto industry will look like in 5, 10 or so years?
I think we're entering a digital world now that we've seen in science fiction. For decades and decades, we've had science fiction has talked about various terms of kind of a digital world where you have avatars and credits and things like that, and digital scarcity is a big piece of that. So I think digital money is here. The money for the internet is here. Global money is here, and it's called Bitcoin. And global money that is digital is going to want to work with digital assets. That means digital securities that are tradable in the same way that Bitcoin is, meaning a distributed ledger. And collectibles and other things that aren't going to be bogged down by the old, slow systems of the old world. They're going to digitize just like Bitcoin is, and you're going to have this very robust global economy with global assets that are unstoppable and uncensorable. I think that's really exciting.
Well, I mean, you get to my long-term views, I'm not convinced human beings are going to be running the world at the end of the century. And so what the characteristics of our successors are going to be, I don't know. I think there'll still be lots of human beings around. but I don't think they'll have the political importance they have now. And what will be around, I don't exactly know, but loosely speaking, some cyborgs, some designed organisms, some robots, something like that. And what role, quote, free will play in all that is unclear to me.
Sure. There might be an input device directly tied into your brain. They might.
Oh, I think that's coming much sooner than that. That's a 10 or 20 year proposition, if not 5.
Yeah, sure. Yeah, what they're doing at OpenAI and everything is very interesting.
Well, yeah, but lots of people are going to. I mean, the opportunity to have a community. It could become as popular as Facebook, right? You can't really be in touch with your friends unless you have the device in your head that allows you to have telepathy with them. I think if that's possible, and that this is an affair among the biologists or something, I think I could, as opposed to being imposed on everybody, it could become something that all successful people feel they need.
There's a natural evolution of technology from 54 with the mainframe, 68 with the microchip, 82 with the personal computer, 96 with the internet, 2010 with the mobile net, and 2024 with the Internet of Value. And money over Internet protocol, I believe, is the greatest innovation of this century, right? We had, voice over Internet protocol revolutionized telecommunications. Now we're going to have value or money over Internet protocol, which will revolutionize financial services and the exchange of value. And look, every stock, every bond, every currency, every commodity, every piece of real estate, every business, every asset in the world will ultimately be digital. It'll be exchanged freely, globally, borderlessly. The idea of nation states and anyone being dependent on a single nation state will change, and we'll all become more global citizens, and the ability to take advantage of this global technology is really a very bright future. So a lot of things we talked about didn't sound so good, but all the things that are happening in this space and how blockchain technology and cryptocurrencies and Bitcoin in particular advance society and move us to a better place, I think are incredibly exciting.
I hope this journey through the history of Bitcoin and cryptocurrency has gotten you excited for what appears to be a bright future and a path to put the power back in the hands of the people. We will continue to tell the ever-evolving story of cryptocurrency and do our part in helping to bring in the next billion users. I'm Patrick McLean, and I ask you to stay tuned as we continue this conversation right here on the podcast Coins.